The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to take a look at the German DAX on a short-term 15-minute chart. You can see the head and shoulders pattern that formed very, very beautifully. It couldn't be any better, as a matter of fact. But if we take a look at the longer-term chart, which is the daily chart of the DAX, you're going to see a market that is quite bearish. You'll notice the high was made way back in June. Here we are in February, and all we're doing is making a 38% retracement, and you can see that downsloping trend line has been, pretty much spot on. We need to get this thing above 11,600 for it to be a breakout. Whether that'll happen or not, we don't know for sure, but the good part is no one else does either. Folks, regarding the program today, on the second part of the program, I'm going to do something special. I'm going back a long time, about 20 years, and go over a big seminar that we had. I'll explain that when we come after the break, but we'll cover some of these charts here early this morning like we usually do. Let's take a look here at the E-mini. Let's do one that's in vogue right now. Here's a 30-minute chart on the gold market. If you take a look at this, we made that high up around 1350, and you'll notice that we've been in a slight downtrend over the last few days. You'll notice the little wave signs that I have in there. That's basically showing you the highs to highs, and we're looking at a 135 pattern right now here in the gold market. Remember, in the gold market, we are still looking for the potential for this market to get down to that 1300 level, around 1292, I believe is the actual level that we're looking at. We'll bring it up here so you can see it a little better. Now, that's just my assumption, and remember how you make an assumption, it's make a you out of me. So keep an eye on this. This level at 1292 is extremely important because it's a 38% retracement of the low that we made back in October. And it is also a, two harmonic numbers down. So that would be one that you would really want to follow. You're at a 1.27 expansion. Just a lot of things occurring at that time. So keep in mind that it's very, very important number to look at. Let's take a look at the E-mini S&P. This is what we were talking about yesterday. We had this ABCD pattern that had formed since the 8th of February. We rallied up, pulled back to a 382 retracement on Valentine's Day, and then went up yesterday to complete the ABCD pattern at 28.14. The high was 28.14.25. We're now trading at 27.90. We backed off a little bit from that level. If we move this into a little bit different time frame, you're going to see the pattern that we were trying to explain to our listeners yesterday, and that was a fact that we are making, some type of a high in here. The important thing to look at, you see the ABCD pattern very clearly there, but as you look at the time frame between the 19th and the 25th, you're looking at a market that is making that expanding 1, 2, 3, 5 expanding triangle. And what's important about this is if you notice that heavy black line that leads you up to that 1.27 expansion, that is really, it just follows it perfectly. It bounces off of it 3 times, and that tells you that it's relatively valid, I would think. So the key level here to watch is 2765. All we've been, in fact, so far, we've not even been able to make the 78% retracement down there at 2775. Going below that, you would be looking at 2735. That would be the 61% retracement of the low from February the 8th. Well, whether that will happen or not, we don't know, but no one else knows either. But that's what we're paying attention to. Now, we want to thank our good friend, Mr. Z, for posting that chart on the wheat, folks. The news out on the wheat is so negative. It reminds me of the old 1976 soybean market that said there were no soybeans available in the world. The only way you could find a soybean would be to go to the Smithsonian Institute. Those were the actual quotes. And of course, from that level, soybeans dropped about $4,000 a bushel. That was a lot of money way back in that era. So we'll see. We're in the midst of 4 years of really good grain crops, just like they've had in Russia and South America and stuff. But one of these days, we're going to have one of these situations where it probably will turn. We did make the long-term 1.618 expansion on the December wheat down there at $5 a bushel. The low so far has been $4.99 and a quarter. Whether that means anything or not, remains to be seen. But the fundamentals are certainly bearish. I mean, they're just you can't find anyone that will even think that there's any possibility of these grains rising, even though corn and soybeans and soybean oil still look relatively friendly. I mean, they have much higher bottoms. They haven't collapsed like the rest of us. A lot of the news tonight is based on the China, USA tariffs talks that are going on. There's a big debate whether they were any good or not. But again, that's a debate that the prices of the commodities will tell us, what direction it's going for. If you'll remember yesterday, we were talking about the British pound and the fact that it was really looking very, very bullish. And if you'll look at it today, you'll see that we are breaking above those levels. We're almost at our price level that we're looking at, which is we just cleared 132.50, I believe, and I believe we're heading up to that 133.20. That would complete that ABCD pattern that started in the middle of January down into February, and then up into where we are now, February. My gosh, we're coming into the last day of the month here, coming pretty soon, aren't we? On Thursday? Yep, we sure are. So that'll be very, very interesting to see, because February has been a straight-up month in stocks, that's for sure. But anyway, the British pound still looking pretty good. The euro that we talked about is still looking pretty good. It looks like we're heading up to that 113.80 to 114 level in the euro. Both of those look like it's in a process of having a pretty good move to the upside. And it just basically right now, it's nothing more than a rally in a bear market. But, these can change, very, very quickly, as we all know. Someone's asking a question about the ABCD patterns and how often do they work. I mean, they're like everything else. And sometimes they work, sometimes they don't. I put it in the area of around 60% of the time. Actually, about 40% of the time, you're going to see a perfect ABCD. In other words, where the AB equals the CD perfectly, and then you'll also see it sometimes where the AB leg is equal to the CD leg in time. That's also a very, very important thing. Now, we've got a really interesting chart from one of our friends up in the far north, up there in Canada, that I wanted to bring to your attention here to show you what it looks like, because it's a real interesting chart. And I would think you'll enjoy it when you finally get to see it, which I hope will be soon. Give me a second here to make sure I get it. Yes, this is what I want. What we'll do is we'll talk about this when we come back from the break. It's a stock of the gold versus the gold miners. It's a longer term chart here, but it does look like it's got some really interesting what we call discrepancies or variations. We'll be right back. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, what you're looking at here is a monthly gold chart, and the gold, as you can see, is in the dotted line up there where you can see the lower tops that are up there, and then the gold index itself, the XAU, is basically, you know, the one that we're looking at here. You can see the downtrending line here, that double dotted line. I put that in to show you that the relationship here is that the gold stocks have been in a much deeper correction than we're seeing in the gold market. That's a big difference. And remember, the stock market has been going, you know, basically straight up, you know, since January. And, you know, these markets have had a pretty good rally, but nowhere near a breakout. Whether this divergence means anything or not, we don't know for sure, because it is a long-term, you know, long-term pattern. And so you don't really know if it's going. This was sent to us by one of our friends up in Toronto, and I enjoy talking about these divergences. But of course, monthly charts are something that is really difficult to trade off of because the risk is so great. So you move down, you know, to the smaller time frames, much like we're looking at today here in that gold market. When we take a 30-minute chart and we're looking at that 135 pattern, here you can control your risk to about $300 or $400, as opposed to a monthly chart where you're going to have to risk a whole bunch of money to see if you're right, usually on those, or at least try it a whole bunch of times, you know, before you possibly get it right. So that's all part of, you know, trading, and you got to figure out what time frame you're at and stick with it, and that's really what you're looking at. Now, there's another one here that really looks very, very interesting today, folks. Now, it's something that we don't trade very often, but it is tradable. It's one of Rich Anderson's all-time favorites, and that is the live cattle market. And I just wanted to bring this to your attention because it's a very interesting pattern here. Post one in English. Thank you. That's as close to English as we get. I know there's too many lines on there, but if you look at it closely, you know, you'll see that there's just a divergence. What it's basically saying, Jose, is that the stock for gold and silver are acting very poorly compared to the metal itself. That's really what you're looking at. But let's take a quick look here at cattle, and then I'll come back to revisit. Yeah, it's in Canadian dollars too, Marshall. Hold on just a second here. Here's the live cattle chart that we're looking at. You'll see the multiple ABCD patterns that started way back in June. We're now up to this 129 level. We just completed a butterfly top, followed by a three drive to a top pattern before. So we've got several numbers up in this area here. What I would be looking for is a market that makes a slightly higher high like it did yesterday and then close lower. Anything below 128 to me would tell us that that top is most probably in, and to be looking for a move of about 5 cents a pound down into that 123 level. Now, the hog market, which we've been following quite a bit with all this news about the disease going on in China, has hit some major support down there at the 78% level and rallied well about over $1,000. But it certainly hadn't continued to go up. It had a bad day yesterday, and when the news is so good for the hog market, you would think that it would not be going down, but it is. But again, there are other people that think that this hog thing is blown completely out of proportion, and that is something that they argue about all day in the annals of the fundamental ways that they're looking at. We've been asked to take a look at platinum, just a second here, because we had a very interesting platinum formation yesterday. I believe it was happening when we were talking. No, it was afterwards, of course. You'll see that the platinum went up to the 78% level of the high that we made back in October. That came in at 862. We're now trading around 856, I believe, and it looks like we could be looking at a possible ABCD correction down here, maybe around that 827 level if we get that. You'll notice at the bottom that we made down there at 78, we talked about this, and we talked about it in the newsletter quite a bit, that we did make that ABCD pattern. And what was so interesting about it was if you count the number of days down in the AB leg versus the number of days down in the CD leg, those were equal. That's one of those cases where you have the AB leg equal to the CD leg in both price and time. This was one of the things that W.D. Gann, preached about quite a bit, was that harmony of AB equals CD and price harmony that you see quite a bit. Now, so you don't always get that, but when you do, it's something that you can add to your probabilities of the trade working. But remember, they're always probabilities. They're never certainties. That's the absolute must that we have to look at. Let's just take a look here at the Bitcoin. We've had a request to take a quick look at that. We talked about this yesterday, the fact that we made it up to that 78% level at 4,200. Then we had the big down move that was based on some news that happened on Sunday night. But the market actually stopped right near that 20-minute line, which sometimes acts as a fulcrum, as a support line, and it certainly has so far. But that big down move at least stopped for the time being. Any move below 3,700 now in Bitcoin would tell us that it's most probably getting ready to go down even a lot lower. But right now at this 3,700 level, it's holding relatively well. Below 3,700, it's not going to look that good. So if you're in Bitcoin, and I know a few people here are, but actually I only know 2 other people that have ever traded cryptocurrencies, and actually 3 people, and so there's not a very big population of it. I noticed yesterday I was checking the open interest in the wheat as it was dropping into new low grounds, and to see if the open interest was decreasing a little bit, and it was yesterday. But the thing that happened, remember in December of last year, they started trading cryptocurrencies on Bitcoin, and the open interest has only gone up to 3,700 folks in a whole year. That is just a very, very small amount, because it started out at close to 2,000, and it's only up to 3,700 total open interest right now. So that's not a very good sign for a really great contract, but it's holding in there. That's the main thing that we're looking at. Okay. See if we have any other questions here. Let's want to cover the last one, the gold, the platinum. Oh, this is one I wanted to cover right here. Someone asked a question about these agricultural products and stuff with these Chinese tariffs and stuff, about farmers' losses. This comes from Rich Anderson, Anderson Capital Management. We'll bring this up and show you that this is what you're looking at up here. You'll notice that the total, the biggest losers, of course, are in the oil seeds, grains and oil seeds. That's basically soybeans and canola. You'll see seafood, cotton, cereals, stuff like that, meat. Those are the main ones that are getting hurt because of this. But this probably will be over relatively soon, would be my guess. That's what the market is basically telling us. So we don't know if, in fact, that is going to happen, but this is what the charts are trying to confirm what we're seeing in the news. Whether that will be happening, we'll see. Now, we got a break coming up here, and I've got something what I think is really special. Going to be totally different than anything we've done before. We're going to go back in time and meet a whole bunch of friends, and I think you'll enjoy it. But I'll enjoy it because I was actually feeling pretty good putting it together. So I think you'll enjoy it. It was a seminar that Mark and I put on here 20 years ago here in Tucson when he was still living in Chicago, and we had friends come in from just about all over the world, Australia, and even Denver, Colorado, which is on the other side of the world. Walt Bressert was there. Bryce Gilmore. It was a whole bunch of really, Rich Anderson was there. A lot of nice people. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I'll just go through an old story here. I posted this chart here. It's one of the things that we had a seminar here in Tucson 20 years, a little more than 20 years ago. Started out to be something just more family related, but we had a bunch of guests coming in. Bryce Gilmore was here from Australia, and Mark Douglas came in from Chicago. Rich was here from Minneapolis. And gosh, a couple other people. Bob Miner was already living here, so there was a whole bunch of us that were just getting to put a little seminar together. And we didn't do any advertising for it or anything, but it was held right here in the little subdivision where I live here in Tucson. We've got a really great little clubhouse, and it has a really nice kitchen. And Mark's wife, Paula, really liked to cook, so she was going to cook for everybody. And my good friend Kelly, who many of you who've been to Tucson, to meet us, he would have been 95 on Friday, but he passed away on December 14th. And yesterday, one of the folks from the estate showed this to Sarah, and she brought it to me. It was actually a part of the little booklet that we made for the seminar. It's about 60 pages, and it's very thick cardboard, all laminated and everything. And we were going to do it. I posted one of the charts from the book in the chat room here this morning. You'll see that's about risk control. But the thing that brought goosebumps to me is if you look at the bottom of the chart there, you'll see that it's Walt Bressert's address, and it's North Oracle in Tucson, Arizona. That's about 4 miles from where we live. And one of the reasons I moved here, way back in 1994, because Walt was here with Teresa, and he and I had been friends since the 60s, and I always enjoyed their company, and of course his analysis and stuff is one of the reasons I came here. So anyway, we started this seminar, and everyone was going to chip in and give a little bit. It was going to be a Friday, Saturday, and Sunday, and Kelly wanted to go to it also, and so we we always had a spot for him. Anytime we went out to dinner with friends and stuff, Kelly was always invited, and he was sort of a family member. But the key here is that we had this little group that started with about 10, and we had 6 speakers with 10 people. Well, it ended up being about 25 people, and it ended up being a really great seminar. We went through Friday, Saturday, Sunday, and they also did Monday, too. We did live trading on Friday and live trading on Monday, and it really turned out to be a whole lot of fun. We always enjoyed it very, very much. But the thing is that as I looked at these charts and stuff, it was really amazing some of the things that we were looking at. But let me just go through you what we were really talking about here. This will just take a few minutes because I think it's worth the whole thing. Mainly, it was a lot to do with Amos Hofstadter, because Amos was certainly big in at that time. He had long passed away, but I wanted to bring this up here because this is something that Amos always talked about. He had a plaque on his little Bunko Ramo machine back in those days, because we didn't have quotes like you did. But you can see here that the chart, what he was talking about was does your position take care of your losses, and the profits will take care of themselves. And this is from Amos Hofstadter circa 1967. Does the position show a loss? Has it reached its price objective? Are you convinced your position is wrong, your opinion is wrong? If you can answer yes to any of those questions, then you can change your position. But if you don't, then you should be able to keep that position on, and that way it'll keep you into a longer term position. Whether that's going to happen or not, in some of the things we looked at, we've been in the Canadian dollar for quite a bit. We got out of it yesterday. That'd been a really big win. We've been in it for several months. We added to it a couple times, which was good. But there's others that don't work out. We thought that wheat was going to go up, and it didn't go up. So you have to stand aside and wait and see what's going to happen with some of these things. So we'll just watch these as we go through. Now, getting back to the seminar, what we called it was, "He who knows not what he risks all." That's one of my favorite quotes from John Hill. But Mark talked about the 3 skills you needed to develop and trade successfully. One is you got to build a foundation of trust in yourself so that you'll act in your own best interests without hesitation. You have to follow a set of steps that will build confidence and belief in your own consistency. This includes learning not to fire money away. In other words, just burn it away by over trading and stuff like that, picking trades in the middle of the day that you hadn't planned. Execute your trades flawlessly once your signal is given. Ask yourself these questions. Is it an identifiable pattern? 2, are the sacred ratios present? 3, can I afford to take the risk? If you can answer yes to all of those, or can give you a quantity, then you certainly must be able to take the trade, because you don't know which ones are going to win and which ones you don't, or which ones are not. Now, keep in mind the most important factors in trading is, 1, money management always takes precedent over trading any methodology, no matter what it is. You must never expose yourself to unlimited risk. Stops are placed for protection against yourself. I can remember my good friend and mentor Dave Nelson telling me, don't ever go for broke, because you just might succeed. Never get into a trade when you don't know what the risk is. And that, believe me, that's the only thing we can control, so you do not want to get into something like that. That's the only good part about gambling, is you know what your risk is, because they have certain rules that they don't expose themselves to unlimited risk, so you certainly shouldn't be able to do that. The mistake is not in being wrong. The mistake is in staying wrong. And fear is a thing that causes us to narrow our focus of attention and distorts our perception of the environment. Keep in mind that self-discipline is the ability of maintaining your focus of attention when all of the things in the environment are in conflict. And I'm seeing that myself personally now, because I'm looking for a bottom in this wheat market, and the whole world is telling me that I am flat out wrong. And I've seen this many times before. That doesn't bother me at all, because I'll try it several times before I finally get it right, if I ever do. And I'm sure I will eventually, but I have to be very, very careful here, because, you just can't keep trying to probe for a bottom. So what you have to do is you have to wait, for a pattern to unfold, and then you've got your secondary chance to do it. The first chance that we had did not work. But the second one we're going to look at pretty soon here may work, but we don't even know if that's going to say that. Never let the market say to you, you never let the market try to save you. You must save yourself. You gotta protect yourself no matter what. We always deal in probabilities, folks. We all know this. The market is greater than anything we can ever even imagine. No methodology of trading can tell you what's going to happen next. So the only thing you can focus on is what the risk factor is. And profits come from a string of trades, not just one particular trade. Sure, you might have a big winner in something, but eventually, if you take care of your losses, the profits will take care of themselves. And that's what you try to do. You don't always get it. Like Mark always said, be rigid in your rules and flexible in your observations. So that's the main thing to keep to look at. Now, we had those of you that have been to my office here in Tucson, you notice that I have that big oil painting behind us above the fireplace there that talks about those 10 things that I look at. And one of the most unbreakable rules that you can have here is never add to a losing position. This is the main thing that we talked about during this seminar that we had for the 4 days here in Tucson. Mark drilled this into everybody there. And of course, most of these folks had heard it many times. It was the people that hadn't been there before that enjoyed it that much, because they got to realize the psychological part of this. And that's what was very, very interesting. We actually did live trading during those Fridays and Mondays, and we had a terrific run, so that was really great. So we'll take a little break here. We're going to come back and cover some more of these psychological things and trading things that we learned from this seminar.
Secure investment. The Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, we're back, folks, and one of the things that we covered in this seminar was the books that Mark liked. Specifically for, the psychology of trading. There were actually 5 of them there. The first one, of course, was Reminiscences of a Stock Operator by Edwin Lefevre. The second one was The Disciplined Trader. Mark Douglas, of course, he didn't start writing Trading in the Zone until he moved here several years later. This seminar was done in 1995. Mark moved here in 97. And that's when he started doing the Disciplined Trader here in the office with me. And each day we would chat and visit with the traders that came in. The third book was The Warrior Athlete by Dan Millman, which was a very interesting book. And, of course, The Art of War by Sun Tzu. And he liked particularly the smaller version of that, not the heavy psychological versions that these people draw out. It was a simple version of Sun Tzu. And, of course, The Psychology of Winning by Dennis Waitley. Those were Mark's, favorite books. We also covered during the seminar, the danger signals that, markets are seldom wrong, but men often are. This is one fact that we must always present in the markets. If prices go up, there are more buyers. If prices go down, there are more sellers. And there are a few technical indicators that can change these things. And the 3 things that you really need to worry about when you're doing pattern recognition are A is gaps. Gaps are unknown sequences that we don't know what occurs. We had gaps in General Electric here this past week. You see them going up. There might be something really big going on there. We don't know. Wide range with big volume. That's another one that's important. You got a lot of people playing. We've seen this in the wheat market on the downside. We've seen it in gold market on the upside. And the last one that's not taken care of too much is the tail closes. In other words, the market closes in the high end of the range just about every day. That means that there's more and more buying coming in. We've seen this over and over in the gold market here these last few weeks. We've seen it in the stock market, evidently since December the 26th, and other markets, of course. But when you start seeing them going, 6, 7, 8, 9 days in a row, there's a lot of buying in there. So you have to have a really strong reason, take to the other side of that. There was a lot of things that happened, of course, during the seminar that we really don't have time to cover, but it was really a lot of fun. And when I got this, it really made me bring back the old days, because it was one of our better ones. And we had Mark and I never had one that wasn't really a super good seminar, but that was one of the more memorable ones because we had so many guests in. Bryce Gilmore spent probably an hour talking about the various Fibonacci ratios that were not near the ones that we look at, like 0.84, 707, reciprocal numbers and stuff like that. He was a master at doing that, so it was really, really quite cool, to take a look at that. Now, I want to, since I've been talking for too long, I want to check here to see how the markets are acting so far this morning. So far, we've got a little bit of action here in the Treasury bond markets. We held that 145.20 level. And I think we still have a chance to get up there a little bit higher, possibly completing an ABCD pattern up at that 147.16, which is that 61% retracement. That would be the fourth time that we've actually hit that. So that's another one that we want to, pay, pretty close attention to. But again, we don't know what's going to happen, but nobody does either. The market that we've had, that stock market yesterday with that big ABCD that completed in the S&P, the key number to watch today, just from my perspective, and I'm looking at it only from Fibonacci perspective, is to watch that 27.95 level, because that's what we've rallied so far after the break yesterday. That was a 382 retracement off of that move from 28.14 down to 27.85. But that's not much of a correction, folks, considering the market was straight up during that time. So that's another one that you want to sort of keep an eye on as you're looking at these things day to day. Anything above that 27.97 level, most probably will tell you you're going to go to 28.02 and maybe even higher, maybe even making new highs, because it's certainly, you're certainly capable of doing that with some of these markets that we're looking at right here. When we talk about the grain markets, I've mentioned that the news is so very, very bearish that I don't care about the news. I'm looking at whether these markets bottom. We had a big drop in open interest yesterday in the wheat, so I'm watching the Christmas wheat. They're at $5 a bushel. We're now trading at 5.02. We got down to 4.97 and change last night. That 499.5 was a 1.618 expansion on the weekly. I'm not taking any position in here because I want to see one more day of the open interest to see what's going to happen, but I am continuing to watch it because I've been in these markets many, many times before when the news is so bearish you can't believe it. I can remember Barton Biggs back in the early 2000. There's so much soybeans out there that he said the only use you could have for soybean meal would be on the floors of the country and western bars, and of course from that level it rallied to well over $30,000. The same thing with the Nikkei Dow. I remember the Nikkei Dow was trading around 6,700 and everybody was looking at 3,000 in it, and that been from a high of 39,000, and from there it quadrupled in price. So just because there's a lot of news out there, it's there for a reason, folks. If prices are going down, there's more sellers. Prices going up, there are more buyers. And as W.D. Gann and also Jesse Livermore once said, especially Jesse Livermore, this is a quote from him. He says, "Don't be afraid of high prices. They're there for a reason. And don't be afraid of low prices. They're there for a reason." That's the correction of the supply-demand equation. So those are some of the things that you want to keep in mind as you're looking at some of this. Remember, it's all about risk control, folks. That's that's the main thing that you really want to keep your eye out. Now, yesterday, we've had these big moves in the Asian markets. We had the largest move in 3 years in the Chinese market, and if you're looking at that on the eyes of that FXI, we did get up to that. We made it a little above the 382 correction here, and yeah, Barton Biggs, he passed away. He sure did. He was a nice fellow too. Okay, let's. We did get above the 382 level in the FXI, and then yesterday it came down a little bit. So whether that means anything, we'll have to wait and see what is going on. David, you got a good sense of humor, buddy. I have to give you all the credit. Besides all the things that you post into the room, you keep yourself really anchored very well. That's really great. Yeah, Barton Biggs was a nice guy. He certainly was. I was able to meet him a few times, and he was really a sharp fellow. Okay, let's move on here to a couple other things. I want to check out this Japanese yen because we're getting really close to a potential breakout, folks. We went up and touched the 61% retracement yesterday again in the Japanese yen and then came back down below it. We really need to close above that 111.30 level in this Japanese yen, and then it should get moving. But these currencies have made some type of a major bottom here, folks. We see it in that dollar index, and we're seeing it in the euro. You need that euro to get above that 114.40 level, and then it's got a really good chance. The dollar index is stuck in this trading range between the 98 on the upside, 96 on the bottom. We're near the lower end of that right now because of the small rally we've had here in the euro and some of the others. But the pound has been, you know, exceedingly strong here. So it looks like possibly they're going to have another referendum vote, you know, on Brexit and maybe decide to stay in the European Union. But that Brexit vote that they made is not binding, folks. They can take, with a stroke of a pen, that can just make all those votes disappear over there. The odds, you know, the rules are a little different over there than they are here. Well, not much different. 877-927-6648.
We both know you've got what it takes to crush your goals with the will to make it happen. So why haven't you accomplished it yet? For most, the answer is fear. Fear is that limiting factor that stops us from getting what we truly want, but it doesn't have to. That's why on Wednesday, February 27th from 5 to 6 p.m., I'll be hosting my 1-hour workshop, Overcoming Fear in 5 Easy Steps. Hi, I'm Steve Rhodes, the 2018 Market Timer of the Year, author of Mastering Probability, and an expert in human emotion. Subscribers to Mastering Probability gain free access to this extraordinary workshop where I'll coach you how to bust through your barriers of fear. How you respond to fear is what sets you apart from the rest of the crowd. Look, this could be the most valuable hour we ever spend together. So come to the homepage of TFNN.com and begin your 30-day risk-free trial of Mastering Probability and take the next step towards the life you deserve.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're chatting here with Mr. Z in the room, and he's asking about the Christmas cotton, December cotton. And there's a double bottom pattern there at that 72.30 level there, Mr. Z. I don't have a lot of data. Just see if I can get this. Let me just post what I have here, because I don't think too many people are going to be interested in this, but we'll just post it for you, of course. But you'll notice here that we do have a double bottom there, and it looks really interesting as possibility. Well, no, there should be the December cotton should have posted now. But you'll notice here that there's strong support at that 72.30 level. That's equivalent to 71.50 in the May cotton that I'm watching. But I don't trade cotton. I'm just following it for size. So I don't I have no interest in it at all. But some of the other, these markets have held up on some of those areas. Now we're having a pullback in sugar today, also a pullback in cocoa. So we'll be looking to rebuy those possibly in the next few days. But we really need that sugar to hold above that 1240 level, and the cocoa to stay above that 2120 level. And of course, we exited it yesterday at the 2260 level. That had well over $1,000 in it, but we'll wait and see what the next bottoming part looks like. So keep an eye on those. We've got an interesting market, of course. We had a pretty big ABCD complete in that S&P. Took well over a month to do it, and it was a perfect one. Had the same thing happen. The Dow went a little above it because of some of the Dow stocks that are so heavily involved with price, like Boeing and a few others. But the NASDAQ was also completing the ABCD, and as did the New York Stock Exchange Index. So that should have a correction. How much we get. The key level is when we take out, if we do take out the 2765 level, we need to hold 2735. Below 2735, we got to recalculate where it's going, because that would be a major correction here, that there's a possibility because of that ABCD of that happening. Whether that happens or not, we'll have to wait and see. So let's stay tuned till tomorrow. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
David White's newsletter, The